to Rand Squawk's US morning briefing for Monday 31st of August 2009. Just coming up now to around 12 o'clock in London, taking a quick look around the markets. A recap of the overnight news as we head into this US session. Obviously today so far in Europe the volumes have been exceedingly light given the UK summer bank holiday, and with the FTSE index being closed, it is the biggest trading index in Europe, so a lot of players out affecting the other European bourses. At the moment it is a case of lower stocks. We're down just under 1% in the CAC and DAX indexes in France and Germany respectively, with T-notes heading into the US Open up over 10 ticks at the moment, and Bund futures pretty subdued with light volumes. Taking a look elsewhere then in terms of overnight news, one of the major things was the main China share index, the Shanghai Composite, which did close down 6.7% today. Again, did somewhat starkly underperform its Asian counterparts with only around a 0.5% decline for the Nikkei. The Shanghai Composite, that was weighed by heavy selling of market heavyweights triggered by renewed worries over potential tightening of liquidity. Reports in state media forecasting that banks lending in August declined further following July's sharp fall from previous month, dimmed buying enthusiasm. Allied to that as well, elsewhere, China's state-owned enterprises, the SOEs, may terminate commodities contracts in what would be a blow to the investment banks that service their commodities hedging operations, as according to Caixin magazine, and again one of the other factors driving the Shanghai lower. And that did contribute, as mentioned, to the negative European equities, and they've pretty much been quiet given the light volumes since then. Elsewhere, in terms of some other notable news stories, the Sunday Times in the UK wrote that finance ministers and central bankers of the G20 countries who meet in London this week will celebrate signs that the worst of recession is over and that upturns have begun in some countries. However, they will also warn of continued fragilities in the banking system and a need to remain vigilant against further crisis. They say that the rise in oil prices poses a threat to recovery, and the G20 is also like to reiterate that interest rates need to remain low for a considerable time. The actual G20 next summit itself is not until the end of the month of September. Elsewhere, the US economy does not need a second fiscal stimulus package. Instead, the government should cut spending over the next 2 years, according to the National Association of Business Economics in their semi-annual poll. And elsewhere, commercial property woes threaten US recovery, writes the Wall Street Journal. Mounting foreclosures in CMBS sector will likely depress values even further as property is dumped on the market, and this will pressure on banks to write down loans further. Also, it's unlikely commercial real estate will benefit much from the early stage of an economic recovery, according to the Journal. What landlords need is occupancy and rent to rise, and that means employers have to start hiring and consumers need to start shopping more, and so far there have been a few signs of this happening. Elsewhere, garnering a bit of attention is the fact that Cerberus is facing a flood of withdrawal requests from investors at its core hedge funds. The paper has learnt, that was from London's FT, investors are understood to be asking to withdraw more than $5.5 billion that represents 71% of assets held in the fund. And also the Federal Reserve, they've made around $14 billion in profits on loans made in the last 2 years, citing officials close to the matter. As according to London's FT, US Central Bank also earned some $19 billion from interest and fees charged to institutions that tap liquidity facilities during the global financial crisis. Take a look then on terms of the calendar. It is pretty quiet today, and it's likely to be a rather lacklustre session with quite a lot of important data points coming out later in the week, and with the UK bank holiday in place today. At 1:30 London time, we'll just have Canadian GDP numbers. 2:45 to 8:45 in Chicago will be the main figure released, the Chicago PMI number for August. Looking for an improvement on the headlines around 47.5 from previous 43.4. And we'll also look out for the name palm indexes from both Milwaukee and New York this afternoon. Other than that, we're looking out for Eastman Novotny. He's due at 3:30 London times and 9:30 in Chicago.